Welcome back to the Dividend Domain. This is episode 16 of the Rob and Fire series. In today's video, I have a $6,000 buy. I've already added the cash to the account, so let's just jump right into this video. Go ahead and pause and read this disclaimer. I am not a financial advisor. Please do not follow anything I do in this portfolio. Do your own due diligence and your research. You are responsible for your own investments and money. All right. For those new to the channel, my strategy is a hybrid system of investing 100%, maybe less in some cases, of my W-2 income to my Robinhood taxable brokerage with a 5% interest rate, margin interest rate. And I'm investing into 3 buckets: growth 40%, high yield core 30%, and then high yield. These are just like the cash machine. That's a 30% allocation, but that's usually ranging for yields between, let's say, 25 to maybe 50%. Definitely leaning away from the higher yielding 50%. I'd say probably 40 is maxing, and that's even pushing the line. So investment timeline is 3 to 5 years to financial freedom or be work optional. And I'm using margin from my Robinhood account to flow bills and lifestyle. So jumping in today, we want to get right into episode 16. Like I said, it's a $6,000 buy. I'm going to do that live right now in Robinhood. So let's go ahead and jump into the app. As you can see now, I just added $6,000 into the account, but we want to use the allocation tool from Snowball Analytics. So I have categories set up in this system, and based on the allocations for each category, you put how much you want to invest or withdraw, and then in this case it's a deposit. You can set it up balance of assets or balance of categories. I decided to go with the balance of assets in this case, so you could see down here it gives me allocations for each asset. The only thing I'm not buying right now is who. I'm just going to leave that as is. I'm down 49%, which is horrible, and I'll just leave it as is for now. But let's go ahead and get into it. Let's jump back into Robinhood. So the first buy is SPYG at 1,200. Let's go pull that out. So SPYG at 1,200. All right. Preview order. See now my average is 105.40. I'm down 1.19%. And let's go ahead and put this in. All right. So that's done. That brings my cost basis down to 104.83, and now we have $2,500.32. 2,530. Well, it's moving as the price fluctuates. You see about 25.28. So let's go to the next buy, and then we'll check Snowball Analytics. That's a position I just added to the portfolio. That's QQQM. That's $750. So QQQM, as you can see, I just added a small position to track it, and then we'll go ahead and add our 750. So it's down. I originally purchased at $253.72, and you see where the price is at now. So we'll go ahead and do our 750. See, and buy. All right, and you see that slightly brought our cost basis down. And then we'll go back to see what the next asset is. And that's IYRI. We're 550 into that. So you can see not much of a difference. I bought at $50.27, and it's basically at 50 even. And we have 550. And this is Neos's real estate high income ETF. All right, so yep, 550, just making sure. Preview order and buy. So we are done, slightly bringing my cost basis down under 50 bucks for this. And our next buy would be BTCI, which, let's see, BTCI. So BTCI, I'm down 18.79%. My cost basis is 42.05, and then we're putting $500 into BTCI. Let's just make sure that aligns. Oh, sorry. Actually 450 into BTCI. All right. So as you can see now, that brought my cost basis down below $40. We're at $39.85, and I think I was originally down 18%, only down 14% now on BTCI. We're gonna go back. See, that next buy is Chippy at 450. So we got Chippy at 450, and Chippy is a new buy for me. As you can see, I only allocated about $5, so it's down a little bit. So we'll put that 450 in. All right, and my cost basis is 61.32. We'll see that drop after this buy. So that, yep, so we're 57.76. All right, let's get back. Going down the list, so we have QQQI at $350, QQQI at 350. It's right here. All right, so $350, and you can see my cost basis is 53.41. It's at 52. I'm down 1.71%. This is about 10%, almost 11% of my portfolio. And we will go ahead and put that 350 buy in. So that barely brings my cost basis down a little bit. So that's QQQI and NVIDIA. We're going to put $300 into NVIDIA. Let's see, where's NVIDIA? $300. Double check, 300. Yep. So it's down a little bit since I last purchased. Down about 3.56%. Cost basis is $14.28. Let's put this 350 buy or $300 buy in. All right. So it brought us down a little bit. And then let's go to our next purchase, which is IAUI. And that's another $300 into IAUI. All right. So my cost basis is 61.10. This is Neos's Gold High Income ETF. Price is 60. So basically I'll bring that up a little bit, but we're going to increase my monthly yield, or sorry, distribution, $300 buy. Let's put that in. Brings my cost basis up a little bit. Not a big deal. That's what dollar cost averaging is about. You buy in the highs and the lows. So next one would be QQQY, $300 on QQQY. If you look here, slightly above what the current price is. My cost basis is $22.57, and QQQY 300. Making sure I'll put that in. $300 buy. So we got that in. Our next buy is SCHD. We're gonna put $250 into SCHD, which is the largest holding on this account. Check. So 250, and we are down from the 31.70 cost basis. So it's always good to buy when it's in the red. And let's put this in. All right, we are done with that. Let's go back to the main. SCHG Visa 250. So 200 in Visa, down about, let's see where we're at in my Visa position. So as you can see, I bought at 330, down about 4.72%. And what does it say over here in Visa? Considering the dividend on here, so it's not as, it's only down 4.08, but let's go ahead and put that $200 in. Should help bring the cost basis down a little bit. All right, so we got the Visa buy-in. Next one would be SPY, but let's take a look here. So if this will load, it should, once I was at zero margin on the deposit, margin used, it should go back to my original margin balance. I think was about 2,900. 29.28, I want to say, or 29.70. Should be 29.70 if I'm not mistaken. So we're almost there to get back to the original balance. So let's do, like I said, SPY. We're gonna do 200 and SPY down 1.37%. My cost basis is 52.32. We're gonna go ahead and put 200. Double check Snowball. Make sure it aligns. Yep, we're good to go. And review order. The buy-in. Bring down my cost basis a few cents. That's not a big deal, but again, it's about compounding. That does increase my monthly distribution on here. And let's go back. We have blocks, $200 on blocks, down. So original cost basis is $15.34. We want to put another $200 in blocks to bring it down. We're double checking. 200, we're good to go. Perfect. Go ahead and buy. Slightly bring that down a little bit. And back here, look at the allocation tool. Maggie, another $200 into Maggie. Maggie's down. I bought at 51.64. $200 to Maggie. Double check. We're good to go. QQQI. All right, so we got that in for Maggie. I'm down 5.14%. And our next allocation would be SCHD, which is another one of my, favorite traditional ETFs, dividend ETFs, I would say. So 150 into SCHD. All right, it's actually cooled off. It's down a little bit. I'm still up now 2.13% on this buy. Then lastly would be Amazon at $150. So let's double check here. I should be roughly around the 29.70. This will drop down. Can't get it to drop down here. So 29.70. Let's go ahead and just do that last buy with Amazon. So I'm at 230 and 56 cents for my cost basis. I'm down 7%. Let's get that last 150 in. Double check. Amazon 150. It is correct. And buy. All right. So we're down 5.5% or 5.6, we would say. Now we should be done. That should be, let's double check here. For whatever reason, this does not want to load. So, all right, finally. So we got it to load. So like I said, back at 29.70 is the margin used. It's jumped up to 70% for margin maintenance. It was, I want to say 68. So it jumped up a couple percent after that $6,000 cash infusion, and everything's been completely purchased now. You can see the updated equity in the account. A couple of these are over $2,000, and then let's jump back into this. So we did the allocation tool and snowball and the $6,000 buy. I will update Robinhood, but it takes a little time to pull the report. Otherwise, I have to do all those buys manually, which I'm not going to do. So on the next video update, you'll see a snowball analytics updated. But as of now, I'll show you. It's just showing right now. This is the gross portfolio value on snowball. I don't account for margin used. I like to see the gross portfolio value. If I look at the net here, this is 15.9, and it should be updated to roughly about 18.19. And again, these percentages will stay roughly the same because I use the allocation tool. That doesn't mean that I'd have to adhere to these guidelines. I can always jump out because I'm thinking about allocating a little bit more to SCHD, but we'll see down the line. So one other thing I want to get into is the jobs report. It's been a rocky week in the market, actually last couple of weeks with everything going on with the war, but never good when we see a decline in jobs in the market. So the U.S. payroll unexpectedly fell by 92,000 in February. Unemployment rates rise to 4.4%. I think it was originally 4.3%. So if you look here throughout this chart, these are showing the jobs added into the market, and look at that. We're looking at a decline of 92. So if looking at the chart, it says non-farm payroll fell by 92,000 for the month compared with the estimate for 50,000 and below for the downwardly revised January total of 126,000 jobs. If you remember in the previous video, we talked about that. February marked the third time in the past 5 months that payrolls declined, which is not good, following a sharp revision showing a drop of 17,000 jobs in December. This is very concerning, especially with AI, automation. Job loss is going to be a result of that. And not only that, everything with the tariffs. I work with a lot of different organizations or businesses in different industries, and a lot of them are impacted by the tariffs, and that does hurt their bottom line, of which can cause increased prices in the products or hiring freezes or firing to accommodate for the increase of operations. And then oil, which we touched on the last video, is another thing. People were already upwards $100+ for a barrel of oil, could get up to 150. I have to go double check on that, but that definitely impacts the economy because, again, everything's moved with energy, fuel. So that's whether it's trucks over the road or planes. However, that does impact every facet of a business. If it costs more to transport goods, to get goods here, it overall impacts the consumer. So we're going to take the hit of this. So definitely keep an eye on the market. Maybe these bigger buys, they're dollar cost average, so I'm not too concerned, but we could see further downturn. So another thing addressing is the FOMC meeting coming up on the 18th. and how this impacts the market. So just to get into a few details, this is a deciding factor for interest rates. A lot of things are taken into consideration in this meeting. And some of the things that could be impacted is policy outlook. We're always looking for guidance depending on how the numbers look, and that could determine whether we're quantitative easing or tightening. So that does impact the liquidity in the market, which in direct result, interest rates, Fed fund rate, these all trickle down. So basically, we're looking at when policy, that's investors' expectations, kind of helps us determine what we want to do. Are we in the market or we're out the market? Risk on assets, risk off. And then market liquidity, which affects stocks, bonds, crypto, housing. We had a government shutdown, which froze a lot of liquidity, and we seen a drop last year in crypto towards the end of the year, last quarter. But obviously, it affects asset prices. That's interest rates, that's mortgage, credit card rates, business borrowing, margin as well. Our margin interest rate is impacted by this. Market volatility, stocks react instantly. Sometimes it could be positive news and negative reaction. You never know how the market reacts. Bond yield shift, crypto moves with liquidity. Thus, the government shutdown froze liquidity. And then depending on what's going on, whether we're quantitative ease or tightening, that could impact these risk on assets. Economic direction signals inflation controls, indicates recession risks, guides global policy. So all of these factors taken into consideration give us a kind of understanding of where we're headed economically in the future. So I always try to tune into the FOMC meetings and stay in tap to who Mr. Jerome Powell, who won't be around for too much longer, but we'll keep an eye on that. The next thing we want to look at is, like I said, we were at $9,892.51 prior to the cash infusion. And again, I said I was at $29.70 of margin, and that will be updated. You'll see on the next video. But here we have about $3,921.86 available for withdrawal. That will be updated again once this is reflected. Once this is reflected within the account, everything's processed. And then you can see right here, we're right back at that same margin maintenance. But guess what? We got more equity in this account paying down this actual margin. Then we got more growth in the account as well. So if you took liking or found value in anything I said in the video today, go ahead and subscribe, turn on post notifications, comment, let me know what's your sentiment. Do you think we're headed down a little bit more? Am I crazy for putting $6,000 in the market right now, not spreading it out? You let me know. Are there any ETFs you would recommend, maybe in a higher yielding category that are a little bit more stable? As of now, I believe for me, Bitcoin and blocks, they're taking a beating. But like I said, my conviction is and understanding is firm in crypto and Bitcoin. So I think we're definitely looking at more upside in the future. So I don't have a problem accumulating at these lower price points while the market's down. That's honestly applies to any asset I own, but crypto's extremely volatile. So that's why I'm just specifically, but again, when you look at some of these individual single cover call ETFs or leverage ETFs, like there's a lot of volatility, especially to the downside. And we're not sure how these will, or if they ever will be able to recover. But again, thank you for tuning in to the Dividend Domain. Appreciate it. Comment, subscribe.